the top left. We can get started with live.
Yes. Good evening to everyone. On behalf of Dr. T. Usha Priya, Head of the Department, and on my own behalf, I welcome Dr.CA Abhishek Murali and CA Divya Abhishek. Dr. Abhishek Murali is practicing chartered accountant at Chennai, who is currently the partner of Mrs. Victor Grace and co-chartered accountant. He is also cost and management accountant and certified information system auditor. He has rich experience for 13 years in the area of finance, accounts, and consultancy. He is also an All India first rank holder in the SEMA strategy examination. We welcome you, sir. Our next speaker for the day, Ms. Divya Abhishek. She is also practicing chartered accountant at Chennai. Currently, she is the partner of Mrs. DSNR and Co. Chartered Accountant. She is an All India 46th rank holder in the CA final examination. We are honored to welcome you, madam. Now over to Abhishek and Divya Abhishek.
Thank you, ma'am.
So a very warm good afternoon to one and all who are joined in for the program today. It gives me great pleasure and a privilege to be speaking for the very prestigious college of Ethiraj. So, in fact, this is a very, very important topic that we have been long planning to have a program, and I think it's most relevant. The reason being that this COVID lockdown, this period of COVID lockdown, we have been in this period for more than 2 months now. And even though the lockdown scheduled to be lifted on 31st of May, we may still feel the lingering effects of it. Let me quickly share my screen so that you can view the presentation. So the topic today is managing financial health post the COVID lockdown. Now, as I said, even though the lockdown may end, the lingering effects of this COVID-19 will be continued to be felt. The reason being, even though it feels like we have flattened the curve, the vaccine or the cure for this infection or for this disease is a minimum 9 to 12 months away. So we have been feeling the effects of a recession. We have been feeling the effects of economic slowdown for the last few months. But the expectancy is that even though some activity may be picking up, we'll find that the effects are going to be felt for a minimum 9 to 12 months. So therefore, while constantly we are reading in the news about how important it is for us to take care of our health, to wash our hands, to wear masks and use sanitizers, healthcare is very important. But at the same time, after a scheduled lockdown period, wealth care is also very, very important. So the importance of both healthcare and wealth care is very, very important in this COVID period, even after the lockdown. That brings me to today's topic, just managing your financial health post the COVID lockdown. Now, when I say financial health, I'm not restricting to only what are your assets and what are your liabilities. We must go beyond. Since many of us are advising students who are going to join businesses, many of us will have family members, spouses, parents, or brothers, sisters, relatives who are in business. So, therefore, managing your business's financial health is as important as managing your personal financial health. So before we know where we are going to post the lockdown, let us understand where we were before this. You look at the screen, you have something is the consumption pattern analysis. I pulled this out from the January 2020 period, where this is what all the various sectors in which an average Indian used to spend. So you see food, you see beverages, clothing, housing, furnishing, health, etc. In this, three critical sectors are going to be deeply affected, at least your spending and my spending. The first being the transport sector. How many of us will be comfortable with taking a bus or taking a train or taking a plane also and traveling to a point? It's going to be much lesser. We've all seen the videos of the Bombay suburban rail where they say you don't have to board the train. You stand, the crowd will automatically push you inside, and when you need to come out, automatically the crowd will push you out. So that's the sort of public transport system that's the lifeline of our country, and so many people use it in such large numbers. So you see, today, even though in so many areas it has been classified as green zone or orange zone, or even if it is a red zone now, in some places you are allowed to go to work, but not that many people are there in the office. The reason being the public transport. If your public transport is not available or is not accessible for the large numbers of people who use it, then naturally, the people cannot resume their usual economic activity. But will you, just because it's there, will you take it? I think there is a fear element, and rightly so. In the same suburban rail example that I gave you in Bombay, you are going to be packed into one small compartment with 200 people, no room to move. You cannot even keep your hand in your bag, you cannot go check. You just have to wait for your stop to come and you have to push your way through. Now, in this environment, if somebody near you is coughing or sneezing, will you have time to cover your mouth? Will you have time to wash your hand? Or you just have to take the full blast of it? So that's the sort of situation it is in a public transport. Same with a bus. Even in a flight, some people say you may be sitting in one end of the flight, and maybe in the other end of the flight. But we are traveling in a closed atmosphere for 3 hours, for 4 hours, in some cases more than 10, 12 hours. So, how safe will you feel if that person coughs? Maybe he has the infection, maybe he does not. But there is still a fear in your mind that it could be spreading to you. So, you are going to avoid taking chances to do those travels, to do the sort of, take the sort of risks that earlier it was never a risk. Suddenly it has become a risk. So, unless it is absolutely necessary, none of us are going to spend on transport. The next sector, the moment you say transport, the next sector that you can think of which will be immediately affected is, of course, your tourism sector. Transport and tourism go hand in hand. If there is no transport, there can be no tourism. And we are all aware, summer is usually the great season where people, take the time with their families. They travel to different parts of India, or sometimes they go outside the India, or non Indians or foreigners. They come to visit India and they have tourism in India. These are all very very important sectors which come exactly in the months of April, May, and June. And unfortunately for us, this is the exact period of the lockdown, and the effects of the lockdown will continue to be felt even after this period. And when I say 9 to 12 months, I think the tourism sector and spending on tourism is going to be gravely hit at least till May 2021. So we may see tourism take a complete lull globally for almost an entire year. The next important sector that will be affected spending wise is your recreation and culture. Many of us go watch movies, maybe at Satyam Cinemas or maybe at PVR or whatever is your preferred movie theater choice. Now, will you be willing to go and take that chance? Yes, theaters are closed, there's no question about it. But even if it is open, I'm not going to be comfortable being in a closed area with unknown people who are maybe eating, coughing, sneezing, spitting. So, all these are realities that are there if you go for a movie. The same applies for even going for a cricket match. The IPL is closed, the IPL is banned. But will you be comfortable sitting and watching 60,000 people with you, watching one match, people sweating, jumping, kicking? All these are things which you don't want to take a chance, especially when there is no cure. Same goes for the restaurants and hotel sector. So these three areas, the spending is going to be significantly affected. So as a person, and the following speakers here, Divya will be touching upon the personal finance aspects. You'll find that she will touch upon this, where these are certain sectors where your spending goes down. So when you're doing your budgeting activity, it's very important that you consider this. So now that we have seen where we were before, that was how we were spending. Now let us see where we are going and how we need to manage our business financial health. Today's program, we'll be splitting it into two parts. One is your business health and the other is your personal financial health. I'll be covering the aspects of the business and macroeconomic picture, while CA Divya will touch upon the personal aspects. What we are planning to do is we are trying to wrap up the presentation as early as possible so that we can have more time in interaction. So I believe both of us and all three of us can learn more and from interacting with you and sharing your questions on screen. So as you have any doubts, we request you to please put it in the YouTube comments. You just type it out in your live comments in the live chat. We will flash it on the screen and we will have a discussion on those certain aspects. So let's understand these critical concepts. Throughout my presentation, I'll be covering most of these concepts that you see on your screen. And these are all very, very important when it comes to managing your business financial health. The first important one is managing your cash flows and profitability. Now, Adi Godrej in the 2008 recession, he famously said this line. He said, your sales is vanity, profit is sanity, cash flow is reality. The reality is in your cash flow, and you will constantly hear this throughout the next 12 months or even longer. Is that in times of recessions, in times of slowdown, you must remember cash is king. So it is very, very important to be liquid and have liquidity at your disposal. So therefore, that brings me to my first point, your credit sales. We are all familiar with the profit and loss account and the balance sheet, the financial statements, where your top right corner, you start off with buy sales. We'll put one number, buy sales followed by closing stock, and then right left hand side we'll have your opening stock, purchases, wages, all that. Now that buy sales figure, it is not all cash sales. In fact, in reality, most of it is what we call credit sales. So when I am selling my product to somebody, I always sell it on a credit basis that I give them extra time. You take my goods today, you pay me back after 60 days. You pay me back after 90 days. These are credit terms, and this is how any business is done. When it comes to a recessionary period, as I said, cash is king. You want to reduce your credit terms period and collect as much in cash as possible. Not only that, it's critical for you to evaluate who you are giving these credit terms to. Now, if my customers are a Hindustan Unilever, it's an ITC, then these are companies that I know will be able to withstand any sort of recession, however bad the economy might become. These companies, they'll be withstanding it, they'll manage to, stay alive, stay afloat through this. So if Reliance comes and tells me, Abhishek, normally I buy in 60 days, you give me 90 days time. I have no problem in giving him the additional 30 days because I know that he will pay me, no problem. But if I'm selling that same product to a small shop that is opposite my house on the same road, just because he is there, I've known him for long, I sell to him. He comes and tells me I need 6 months' time, then I'll make the payment. Whether it is wise for you to give it. As I told you, we are all facing a recession. So whether that same small shop, he'll be able to withstand the recession as much as a HUL or a Reliance, it's not possible. So therefore, you have to evaluate who are your customers on a case-to-case basis and see how much credit terms you can give them. The next point is very, very important. Try to avoid your capital outflows to the extent possible. What do I mean by capital outflows? Let's take an example. There's a builder who's living down your road. He's constructing a new apartment and he's taking bookings for this. So in January 2020, you go and visit that site. He says, you ask him how much, he says 10,000 per square feet. Say, okay, but you don't do anything. You get a call back from him today saying, you are interested that time, 10,000 per square feet it was. If you make the payment in the next 2 weeks, I will give it to you at 4,000 rupees per square feet. 60% discount, a huge beneficial offer. You'd have never got these sort of offers before. So very tempting for you to accept it. So let's say you accept it and you make the payment, full down payment. But here we have to wait a minute. Let us understand what are the implications of this. Now, when I make the payment for that property, minimum 3 to 5 years I have to wait for delivery. if it gets completed at all. Normally, builders these days, 3 to 5 years they are taking. But if you drive down OMR, you will see the number of incomplete properties there. So, therefore, in the current scenario, whether that builder will be able to complete the property at all, let alone complete it in time. Next, during this period of 3 to 5 years or even longer, I have to pay rent for the house that I am living in. Till that gets completed, I have to stay in one place, so I have to pay rent. The next important thing, after paying rent, I have to pay my EMI. I have to pay my pre EMI interest on that loan. I have to service that loan. I have to pay the interest on that loan. Then you may say it is an advance. We have all studied accounts where they'll say you pay an advance, it is an asset in your balance sheet. But really, I have paid money for a house that I have no control over its completion. I am waiting on that builder to complete. That fellow should stay alive. He should be able to complete the building. So many aspects are there. So, really, it is not an asset, it's a liability. And on top of that, I have taken a loan. I have to pay back that loan constantly. At the end of 3 to 5 years, finally I'll get the house. Then I have to put it on the market. I have to leave it on rent. A lot of these questions are there. So you see the sort of span of issues which are there in 3 to 5 years. On day zero, that is current day, you're spending several lakhs or several crores in buying the property. All of a sudden, all of a sudden, 12 months later, I'm sorry, 5 years later, that's when you get the asset. So within the next 12 months, during this recessionary period or even longer, if there's any emergency where you need the funds, maybe a medical emergency, maybe a situation may arise that a job crisis might be there. So a lot of job losses are there or pay cuts are there. Some employers are already saying you have to collect only 40% of your salary, you can collect only 30% of your salary if you are lucky. In many cases, they are not even renewing the job. So in these scenarios, the sort of reality that we are facing is very, very bleak at times. So we must be prepared. So if this situation arises and you have to justify to your family, no, no, I cannot do it because I have purchased a property. They say, no, no, why don't you sell the property? You have to say, no, he has just started construction, he'll finish only after 5 years. So it's a very, very pitiable situation. So therefore, the general principle is avoid your capital outflows during recession unless you have adequate buffers to make the payments. The next is your working capital management. Now, this is a chart that many of us are familiar with. We would have studied it in when we are studying or we'll be teaching our students. This is called working capital management. And while the previous slide, every situation I told you involved an outsider, this is the only area where you yourself, without any involvement of an outsider, you can control your own expenses. The first being your inventory management. Inventory or your stock is the lifeline for any business that's in products. So first thing you have to understand is just like how that flat builder offered you a huge discount, all your suppliers will also come and offer you big discounts. You buy my leather for the next 8 months worth leather you buy today, I will give you 50% discount. Normally you buy only for 2 weeks. You buy 8 months stock, I'll give you 50% discount. If I'm making footwear, then 8 months stock is very, very useful for me. It looks like so I make that huge payment and get it. Because 50% discount is big. When I sell my stock, I can make a huge profit because the cost of the leather is only half of what it was. My sale price remains the same. Or if I want, I can give discounts. So this is the sort of mindset that I have in buying that big pile of stock. But I have to store the stock, so I have to take a go down on rent, and I have to get security for that go down. Then I have to ensure my leather stays good, it does not get damaged. So pesticides, chemicals, some person to come and see that it is sprayed regularly. There's going to be floods, there's going to be storm. We've all read the news where now there's a cyclone heading for Gujarat and some parts of Orissa, Andhra, and maybe the effects later on will be felt in Tamil Nadu. So these sort of situations can arise. So I have to ensure my go down is protected, my products don't get damaged. Then logistics to go from point A to point B. So in the sort of greed to buy so much stock at a discounted price, I end up incurring so many expenses. Now you may think, no, no, don't worry. You've got such a big discount, so when you make a sale itself, you can recover all these expenses. Sure, But in a recessionary scenario again, will you have the same sort of demand that you had before? All of us here wear shoes, all of the viewers also wear shoes. Shoes is not an essential item that you will refill every week or every 2 weeks. You will try and use it as many years as possible. Only when it becomes unusable or damaged or torn, you will consider changing it. So it's not an adequate necessity. And globally, when a COVID is hit globally, naturally nobody is going to import it also that much. So all that leather, after 8 months, when you are not able to make a sale, it will go to waste, and you will have to start selling leather instead of becoming a footwear seller or a shoe seller. You have suddenly become a leather merchant because you have to dispose of that excess stock that you have. That's a very very sad scenario that you are in, and it's very important for us to manage our inventory during recession. What is advised is something called the JIT system, or the just in time inventory management, where you keep enough inventory to service your regular orders only. If you are getting a big order, then after getting the order, you purchase the raw material. You may not get a big discount, you may have to pay a higher amount, but what you do is you secure your income before incurring your expenses. And that is the general theory that has to be followed when it comes to a recessionary period. The second step is try to recover any old pending receivables. In business, because of long lasting relationships, we sometimes extend better credit terms to our customers. I may give another 30 days, another 60 days. In some cases, I may give an additional year itself time to my customer because he's been my customer for 20 years. So, first step that you want to do is try to recover your old receivables. That brings me to my very critical point, which you may ask a question. You are saying recover old receivables, Abhishek, but he is also facing as much a recession as you. How will he pay you? You're absolutely right. In these sort of times, it calls for creativity and innovation, and that's when I think younger members and students who are passing out, they can play a very very key role here. So you have to be innovative in a time of recession, which means if that old receivable is there, tell them, sir, you pay me in the next 2 weeks, I'll give you a 10% discount. You pay 90% of your dues. So if he has to make some payments to 10 parties, he'll think he'll make the payment to you first because you are giving him a discount. No? So in next 2 weeks, if he pays you, he gets a 10% discount. It's still better than paying you entire 100%. So he will definitely consider paying you earlier. The next step, and this is an example of one of my clients, where a car dealership, they said, we have to survive through this COVID period, so we need to make a minimum set of sales. Then they said, okay, let us discuss how to do it. We came up with a strategy where they sell their product and then they promise in the next 12 months, if the person loses his job, then the car dealership undertakes, they promise to buy back the car from the person who has bought the car. Now, these are unprecedented things. Initially I was very against it. I said, your margins are so small. Why do you want to promise that you'll buy back the car? He may be mismanaging his business or he may do something to affect his job. It may not be related to recession. But their logic was the next 3 months we have to make as much sales as possible because we need to survive. Once we survive the next 3 months, we'll pick up. Once the economy starts picking up, we'll make enough sales. We'll be able to buy back cars also if we want. So we don't have any problems or any worries about that. That's the sort of approach that sometimes businesses need to have. They need to come up with innovative strategies. Staff and HR management. The entire role of a HR, the entire role of staff is going to undergo significant changes. The first critical one being that you're going to see various jobs go extinct. And I talk about managing financial health. If you're a business, let's give you a scenario. We used to have marketing persons. They'll take their bike or they'll take their car. They'll go door to door to each factory or each potential customer to sell their car, to sell the product. Now they'll go, they'll market the product in the boardroom, and then they'll take their bike, go to the next customer. Like this, they will do tours around each city, each state, and then they'll go to different towns. This is what they do. But in a recessionary scenario or in this sort of COVID lockdown, we are not even allowed to go on the road. let alone go to some stranger's office, present the product for 2 hours. These sort of scenarios are not going to arise. So I am paying that person a salary to sit in his house and not do anything. His job has become extinct. But at the same time, no matter what recession happens, no matter what lockdown happens, one common thing that all of us are doing is every morning we will take our phone, we will see Facebook to see latest notifications, we will see Instagram, we will see Twitter, and this is the common thing that we are all doing. So when we're all doing that, this is all doing, doesn't it make sense instead of marketing, paying that person a marketing salary to sit at home, if I advertise my product on a Facebook, if I advertise my product on Instagram, then at least people are seeing my product. They are seeing my marketing is reaching people as opposed to that situation. So you need to start changing your approach to doing business. When you change your approach to business, when you change your approach to staff and HR management, what you'll start seeing is the business's financial health will start improving. I repeatedly say this, in a time of recession, you have to first survive. Only if you survive can you then thrive. So focus on survival through the period of your recession. Some other important aspects include your expenses management, like your loan, like your rent. The next speaker she'll touch upon the RBI moratorium and how this moratorium extends to credit cards also. So if you have credit cards payments, so you can fall under this moratorium period. But whether it's beneficial for you or not, you just have to wait to listen. And of course, the compliance and government measures to see how much benefit that you can take out of it also will be covered by her. There are a couple of more slides, because it's a congregation of faculties here and many teachers and maybe some students also. I'd like to share a few insights as to what is the impact on education. So, as I told you, the next 12 months, I think minimum we'll be facing this sort of lockdown situation, repeated lockdowns, or maybe a situation where you cannot go to school, students cannot congregate together in large numbers. But how long can people say that I'm not interested in education? People still have to learn. And as educationists, we still have a responsibility to students, we have a responsibility to society to teach them, to train them. So for the next 12 months, it's very, very critical for an education institution to gear themselves up for a scenario of a prolonged impact of this COVID 19. So when you talk about financial health, you need to think of qualitative education also. So if people cannot come to school, what is your education institution going to do? Now, both CA Divya and I were on the boards of various, board of studies of colleges and various other universities also. And I think we've been quite busy advising them on how to, pivot in this period. And we've got very, very positive responses from all of them. And we are continuing to work on how we can improve the curriculum. So the first advice that we have is we have to start transitioning from a physical teaching mode to a digital teaching mode. Maybe more recorded classes, online classes through Zoom or any other app that you're comfortable with, and mobile learning, how you can integrate this with apps, come up with an innovative curriculum. How can you reach the students? If you are aware, the finance minister made a 5 day stimulus package, an economic stimulus package with so many initiatives. One of the initiatives that she announced was for the education sector, the reforms, where she said they'll be introducing 12 new channels for interactive education with students. So the government, they are also aware that the education needs to go on, and they are coming up with creative solutions on how to address it. So being private institutions and teachers who are part of these institutions, it's very important for us to quickly gear up. Otherwise, we will be lost. As a famous saying goes, when it comes to matters of style, swim with the tide. When it comes to matters of principles, stand like a rock. So, as far as our principles are concerned, we must be firm. But as far as technology and style is concerned, we must keep changing. And I think the government has taken cognizance of it. So, we must also be in tune with this. We must focus on new skill development for our students. As I told you, they're going to be a push to a digital age. I gave you the example of the marketing role that has suddenly become extinct in a matter of 2 months. Like this, many new job roles are going to be extinct. So when your students pass out of college, when they leave the university, or they have campus or there's no campus, they have to go and apply in the open market. How can they be of value to the employer? We have to start thinking of that. Gone are the days that people can say, I got 95%, I got 96%, therefore I request you to hire me. People are looking for more. So your students have to be the asset to your employer. They should not be an employee. They should see how they can be an asset. So they have to come up with skill development. And this is also an opportunity for education universities and schools where you offer skill development courses. You offer certificate courses, maybe building a website, maybe something like a Python or HTML and all these Java or other, web development platforms and technologies you can teach the students. So this way you are empowering them to get a job. Not only that, you're creating a new line of income for the college also. These are certain changes that I significantly expect in the education industry, and we definitely have to gear up to it. And even though it appears that I've been talking about a lot of negative things, I just want to conclude on a positive note before I hand over for personal finance. Yes, we are in for a tough time in the next 9 to 12 months, but what we must remember is that there are only two countries, two developing nations, that are expected to have a positive growth. Only India and China are expected to have positive growth. I have no doubt, given the Indian spirit, given our dedication to our hard work and efforts that we have constantly put in, India will come out flying. But we have to take the next 9 to 12 months with serious respect, be safe, and also be careful with how we spend. Once we do that, I am sure once the recession ends or once the economy starts picking up, we'll leapfrog and really perform much better. Thank you very much. Over to CA Divya on the personal finance aspects.
Very good afternoon to one and all. We are truly living in unprecedented, unparalleled times. The whole world is in a state of shock with what is happening. Now, having said that, the government of India has given a fillip to the economy by, by removing a lot of restrictions that they had imposed earlier through this lockdown 4.0. Having said that, however, we still notice there's just reduced activity and spending in the market. Therefore, the approach to our personal finance has to dynamically change in these evolving times. Now, in this view, I've prepared my presentation keeping in mind what are the precautionary steps you need to take. How are you going to save your finances? What sort of investments you should be looking at? How are you going to improve your position currently? The whole landscape in which we are living has changed. So it's very important that we understand what benefits the government is giving us and how we're going to tide through this crisis by being insulated and saving ourselves from it. The first step is preparing an emergency budget. This is something that we would have taught students, we would have seen in companies, but how many of us are doing it at a personal front? It's important during the times of crisis for us to prepare an emergency budget at your individual level and at a family level. The time period for which this needs to be prepared should be for a minimum period of 6 months, extending to a year or two. Now, why do I say this? Even though the lockdown has been lifted, there's more economic activity happening around, it's going to become better. The impact of this recession might persist. So, it's important you have a budget. The first step would be to estimate your income. Now, when I say income, I mean the actual amount that is going to be credited to your account. Keeping in mind that you might not have as many promotions as the earlier years, there might be a pay cut, You may not have a pay increase. So, what is the actual amount that you're going to get on hand? It's important you remember that. The next stage is to estimate your expenses. Now, we all hear about essential, good expenses, non essential expenses. What are these jargons? As I would like to say, it is expenses for life and expenses for lifestyle. What you spend on life is imperative. You cannot cut it down, which would be your food cost, your rent cost, and your tax costs. The others being your lifestyle. Say you want to buy branded goods, luxury products, if you want to buy car, AC, other electronic goods, all these come under non essential expenses. If you ask me today, what do I buy, Samsung or Apple? Should I be more cost conscious? My answer to you would be do not buy anything at all. For the next 12 months, have a tight string on your budget. It is important. Now, when it comes to essential expenses, when you factor in your food costs, remember that there's an inflation. Now, we are aware when we go to the market, the cost of potatoes in March is far higher now because of the inflation in prices. So, ensure you do that. Once you complete this exercise, if you still have an excess, then look into investing it. Now, when I say investments, ensure you put it in highly liquid or fixed deposits so that in future when you need that money, it will be available at your disposal. After this exercise, unfortunately, your bare minimum expense does not cover your income. Then you have to look at mobilizing that fund. Before you jump into a loan, see if you can mobilize it between your friends and family. In fact, a lot of private lending institutions are now giving COVID loans, which are structured around providing immediate liquidity, where when you only make the actual withdrawal of the loan, you'll have to start paying your principal and interest. So it's a good time for you to be aware as to what is available in the market and then mobilize your funds accordingly. Once you finish the budgeting exercise, there are two important points you need to consider. The first being maximizing this revenue. The income that I said gets credited to your account, that has to be maximized. First stage is to look at alternate ways. So, since all of us are strictly not traveling, we're saving a lot of time on that. So, over and above your regular working hours, see if you can do something else as a hobby, as a passion, and earn money from that. There's no restriction in geography now. In fact, take Amazon. I'm sure all of us have bought from Amazon at some point of time or the other. Their existing business is the same. They're selling the same products that they used to sell before the COVID. But how have they changed it? Now, when you visit the website, they have different ways of packaging their products. It says work from home essentials, essential items for delivery. So, what you need to do, you just need to reinvent whatever you're doing in an existing manner and package it differently for people to look into. If you have any skill, any passion, it's a good time for you to make use of it. In fact, there's going to be no geographical limit. So, somebody from the United States can be availing your service. So this is a good time for you to analyze that. The next is to understand what are the relief measures that the government has given. Now, as we are aware, the last 5 days, the government has come up with various reforms and benefits. These are, you need to be proactive. These are not automatic benefits. They are targeted measures. So I will cover the important ones over the course of my presentation. Now, after the budgeting exercise, if you feel you do not have enough funds, see if you can tap into your own emergency savings. You would have kept it aside for your children's education or for your own future studies. So it's a good time for you to spend from that before you go into for a loan obligation, where the interest cost will still be piling up. With all the no contact delivery and purchase that is happening, you will be using digital payment platforms like PayPal, Google Pay, Paytm. Now, when you use that, see what are the benefits they're giving. Some might give you a cashback opportunity if you use your HDFC or your ICICI card. Some has scratch cards. Even though the amount is small, it is worthwhile for you to know what the benefits are by paying online and to make use of these packages. The next stage would be your necessary expenses. Now, you cannot cut down all your expenses. Some expenses are going to be mandatory. Take your everyday newspaper. You see that it's almost half, it's become so thin. What is the cause of this? There are no advertisements anymore in newspapers. Now, big companies are now advertising through social media platforms. Now, this is the transition that has to happen. So when you look at your expenses, before you cut down completely, see if you can innovate on how you spend and how you market. The auto debit payments, I would like to call this the silent killers. These are your SIPs. You would have enrolled for them when you were in a good position, when finances were good and they're not tight like now. But it's a good time for you to understand what is going out of your bank account. Take 1 month's bank statement. Understand if anything's getting auto debited where you don't have to approve it. Be it your Netflix, your Hotstar, gym memberships, various other components that might go as an auto debit from your account. See if you actually need it. If you feel you can pause on it, it's a good time for you to just give it a pause. After 12 months, you can always revisit and resume this when you have a steady flow of income. Credit card payments. There's a lot of confusion around this with the moratorium that's coming up. However, I'd like to emphasize that even though there's a moratorium on credit card payments, your interest cost on it is still continuing. So if you have factored this into your expense account, pay it off. You can stave off from spending from your credit card going forward till you come to a better position. Rent is another unavoidable expense. What is your expense is going to be an income for somebody else. So, talking to your landlord and asking him to waive this expense altogether may not be a viable solution because he is also going to go through some difficulties during this time. However, one thing you can do is you would have paid a security deposit. This is usually a lump sum amount that you would have paid your landlord at the time of start of your lease, and he will be refunding this to you at the end of your term. If you do not have immediate fund flow, request your landlord. Ask him if he can make use of the security deposit till the time you tide over your crisis, and you can always replenish that fund later. Times like these, we have understood that health is wealth. Like so, see if you have health insurance. If you have already taken health insurance, understand what is covered. Because this is not the time you want to spend on hospitals and medicines with all the costs that are increasing. Understand, in fact, there are a lot of COVID insurance policies that are coming your way. Talk to your agents, see if you need to have more cover. There's another benefit in doing this. It is not only an expense, but even for your income tax purposes, you can take this as a deduction. Now, the next one is a critical point. We see this happening very often. There's a lot of panic selling in the market, especially with the advent of what happened with Franklin Templeton a few weeks ago. There's a lot of general panic that is happening in the market, and there's dampening of sentiments. Now, what we need to remember, there have been several dislocations in the market in the past. And it has always come back, be it the dot-com burst, the 2008 financial crisis. There's always been a correction despite the volatility. So if you had a fundamentally strong position when you invested, it is advisable for you to hold on to your investment. There's a difference between paper loss and crystallized loss. As long as you see the loss only on your screen, it is a paper loss. The minute you hit the sell button, the loss becomes real, which means you're no longer holding on to the investment. The market is low right now. You hold on to your investments if you had a fundamentally strong position, keep on to it. Maybe a year or two later, it will recover and you will be in a better position. So, what you need to do from your end is analyze what sort of investments you have, whether it's a well diversified portfolio. If so, it is healthy to hold on to it. Now, as I said earlier, the government of India has really risen to the situation. They've given various reforms in different stages. I'm going to be covering some of the important targeted measures that the government has given. The most significant one is in the form of withdrawal from your Provident Fund account. Now, Provident Fund is something that your employer would have deducted on a month on month basis from your salary and deposited into your fund account. So the government is allowing you to withdraw up to 75% of their accumulated fund or 3 months' wages, whichever is lower. Usually, if you withdraw from your provident fund before completing 5 years of service, it is fully taxable. However, the government has given another benefit by saying this will not be taxable. So, for those who are in need, tap into this emergency saving, withdraw this fund. In fact, more than 3,000 crores has already been withdrawn by various people. They've also given some more benefits to companies in the form of reducing the rate of both your ESI and your PF, PF from 12% to 10%, and ESI from 6.5% to 4%. The other measure is giving money in the hands of those in need. The government has released For Jandan holders, up to 1,500 for 3 months together, including grain and dal. Over 20 crore people have benefited from this. So even if you might not benefit from this, if you know somebody who will, it is good to let them know and ensure that they get this benefit. They've also given 1,000 rupees to senior citizens, Divyang, widows, Manrega workers. Their wage limit has increased. For health insurance cover has been provided to medical professionals who are doing all that they can during these times. Over and above at an individual level, even at an MSME level, they've given some benefits. There are about 64 million MSMEs in India who are providing more than 6,000 products that we use on a daily basis. So the government has looked into their needs. They've given an infusion of equity of 50,000 crores. They've also given loan with increased tenor, moratorium, capping the interest. Over 3 lakh crore collateral free loan where even though the banks and NBFCs were refraining from giving owing to the risks that are there in them developing these MSMEs, the government has now gone one step ahead and said they'll give full guarantee for these loans taken. Not only that, the ambit of MSME definition has been expanded. So more companies will fall into this. So it's a good time for you to understand what will fall into MSME and make use of these benefits. There are also certain sectoral reforms that the government has provided. They've encouraged public-private partnerships in defense, aircraft, and other spaces. There is a lot of infusion of increased employment. These are long-term plans that have been introduced. For the first time, without questions asked, the government is releasing refunds. Usually, if refund is owed, they might get into a scrutiny assessment, there'll be more questions, they might verify what has been filed and then only release. But since these are difficult times and people need to get what they owed, the government, without any questions, has released this amount. For individuals who are owed up to 5 lakhs of refund, you should have the credit into your bank account. If you haven't, look into it and understand what is the reason for the same. For all LLPs, firms, charitable trust cooperatives, irrespective of the amount of refund, they have released it unilaterally. So this is a great reform. In fact, from personal experience, over 200 of my clients have already gotten this into their bank account and they're hugely benefiting from the same. Return dates are extended. Why they are doing this is they're giving you an information that you focus on your business, on revival. You can focus on statutory requirements later. They've reduced the TDS rate. They've provided various other benefits for companies by the company Fresh Start scheme, Vivad Se Vishwas, and GST extension of return filing. Now, after the government, the RBI has also come out with various relief measures. It's usually known as the Apex Bank of India, the lender of last resort. The most critical being moratorium on loans. Let me take some time to explain this to you. Now, moratorium is not waiver. I repeat, it is not waiver of your loan. What they have done is supposing you have taken a loan for a period of 12 months. Now RBI is saying you take the period as 15 months and for the period of this 3 months, April to June, you don't have to pay interest on it. So while you can avail this, you talk to your banker. If you feel even for the month of May it's not late, you can avail this benefit. What you need to remember is the interest cost on this is still building up. So if you're someone who has budgeted for this, it is worthwhile to keep paying your EMI. If you haven't and if you have multiple loans, try to avail this opportunity for the loan with the least interest rate. That way you will not be paying additional interest on a month basis. The other scheme is to refinance. They've infused liquidity up to 10% of GDP. They've refinanced up to 50,000 crores to NBFCs. Now, this is not only to relieve the NBFCs, but it is also an information to individuals like us to tell you that there is money with the government. Do not get into a panic mode of redeeming all your investments. They have enough funds and they will be able to meet your demands. Having said that, we are living in truly difficult and challenging times, but I strongly believe whenever there's an adversity, there is an equal opportunity. India is one of the fastest growing economies in the world. So what we need to be highly motivated. Being the face for tomorrow, we have to ensure we push into the digital economy. We go all in. We rebuild ourselves. It's a good time for us to integrate and understand what we need to do better and how we can put ourselves out there. As the previous speaker already said, cash is king. It's very important you stay highly liquid during these times and you're prepared for any sort of calamity that might happen in the going forward. There's a huge shift towards localization. More companies are looking to take benefits from the local economy. In fact, the finance minister said, go vocal about being local. A lot of changes are coming in this front. Be aware as to what is happening. Keep yourselves updated and reinvigorated in these times. Thank you so much. A special thanks to Ethiraj College for having us in this session. We'd be happy to take any questions that you might have. And I'll also put in my email ID at the end of it. So for those who are asking for the presentation, we'd be happy to share it by email to you. Thank you so much.
So if anybody has any questions, they can put it on the comments. We'll be happy to answer it on to. Revati ma'am, over to you.
Yes, sir. Any questions, participants? So, if there is any question in the chat box, sir?
Not yet, ma'am.
Okay. So, shall we wait for 2 minutes?
Sure.
Okay. Is there is any question, sir?
No, ma'am. I think over to you, ma'am. I think you can
Okay,
proceed.
sir. Okay. Thank you, Dr. Abhishek and Divya Abhishek, for enlightening us on managing financial health post-COVID lockdown. And also, I thank all the participants. Thank you, sir.
Thank you.
Thank you.
Thank you.